right. So I'm curious about the signs behind you on your monitors. What are they and what are the stories behind them?
Well, there are things that some of them have kept me in the game. One says, I don't want to rattle you all, but one says, rules, not emotion, 357. That
Stop
means,
losses.
yeah. Now I've tightened it up a lot. I kind of think it's more like 345. If I can get out at those levels. The next one is patience and rules, not fear. And I think people, when the markets pulls back, it seems to be very abrupt. I mean, didn't we have a 7% pullback on a Thursday about 3 weeks ago?
Yeah, I think so. I think so.
You know how many people sold amazing stocks because they're like, my P&L management or trying to avoid volatility has caused more people to get out of amazing stocks and life-changing stocks have been given to us recently, and people have gotten shaken out of them. There's no reason to sell many stocks that day. I may have trimmed off just a couple percent of a few things that were ragged, but I didn't sell much that day. Another one is follow the volume, and follow the volume is not as relevant as when I taped it up there 15 years ago, because the Fed has changed the game. In the indexes, markets sell off on crazy fear-driven thunder volume, and then they levitate slowly back up on less than normal volume. So I consider volume in the lately, because of QE, we've seen some amazing volume come in on the upside in the indexes. But in the prior 10 years, markets have gone down on dramatic volume and gone up on less than dramatic volume. So relative strength and trend has been trumped volume. I consider volume gravy or a added bonus, but not mandatory. It's a little bit of a adjustment. I still want that volume, but I'm not going to demand it if the price closes dead high. This one is really good because of earnings. It says volume explosion, gap up equals buy. And that's just institutions screaming. Zscaler had it recently. Twilio had it. I mean, a myriad of stocks have had it. But I used to dislike the quiet period between, or what the CEOs can say versus talking to analysts and dispersing information sporadically. So now I think the institutions, when they pile in there, they're showing their hand. I know they're going to be there supporting these stocks that I'm buying. Like, I'm still a fly in the spectrum compared to these giant, massive multi-billion-dollar funds. And I'm just a parasite piggybacking off of those guys. So when you see the volume, now it's an added bonus. I get right in there. And the last one is regain of 50-day MA, explosive volume equals buy. You asked me, do I buy? I said I buy 80% of my stocks on breakouts. I will buy, usually adding to stocks that I'm already in when they break the 50 and then they come ripping back up through them. And if there's like a big leader that I missed and the 50-day would ever catch up to the stock, which doesn't happen in this market, and it gets shaken below it and then it comes through, I'll go in there and buy some. I usually consider those more add points than starting initial points.